What is good, Tsla family? It's Ray J back with another video, and in this one I want to break down what's happening with Tesla, SPY, and a couple of other tickers. I'm going to break down some very important developments on the charts and how things could play out in my personal opinion. But let me first mention that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Mumu link, which is down below and in the description. If you sign up for Mumu, deposit $100, you are guaranteed 7 free stocks, and the offer ends very soon in just about 3 days from now. Anyways, now I'm going to break down some very important technical developments and kind of talk about what I think could play out for the charts and Tesla. As you guys know, we have quite a bit of data coming out for Tuesday through Friday for the markets. Thursday and Friday will be the biggest days as we have the GDP numbers coming out. On Thursday, not to mention Friday is when we have the PCE data inflationary report. That's going to be very important as well. Now, these institutions, these market makers could easily use this data as an excuse to either push stocks or even dump them. And I want to break down exactly why that is, because right now algos are showing something very interesting. So for Tesla, I just want to say that right now the structure is bullish. Tesla is bullish. We're going to likely get a nice push in June. But before that happens, we may continue to consolidate in this range. We could even see Tesla dip a little bit first before that ends up happening. I think that's very important to note. Now, when you look at the daily time frame of Tesla, things are not looking too bad. We actually had a nice day on Friday relative to the markets. We could even see Tesla try to push a little bit higher, but I still think it's going to consolidate for a bit before we get that big push, the one we're looking for into the 200s. Now, is it possible Tesla does that sooner? It is possible, but I think that it may take some time for us to get there. And we may have to wait like another week or two before we finally start getting that push in the month of June. So, what do I think could actually play out first? I want to talk about another move that might come first before we actually get something like that. So, one thing worth noting, at least, about Tesla is that Tesla is heavily impacted by tickers like SPY and the QQQ. Historically, Tesla was actually very similar to SPY for almost all of 2023. And then since this year started, Tesla was actually heavily underperforming SPY and the others because we had quite a bit of negative news coming out for Tesla involving their margins and such with earnings, and the list goes on. Now you guys can see that they both kind of bottomed here, and ever since they both hit that little low, Tesla did get a little rally, at least as SPY pushed up with it together. They came down together, and Tesla didn't really push as high as SPY did, but it did slowly uptrend a little bit more. So there was a lot of similarities between their price action. And the same thing could be said about the QQQ. When we see them on a day-to-day basis, Tesla is still heavily dictated by SPY and the QQQ. It does follow a lot of trends. It was only weak during this one period since the year started because of a lot of negative news for Tesla. It was very weak, underperforming relative to the markets. But Tesla still will be impacted by the way the overall flow tends to move. So with that being said, one thing you'll notice about SPY is that we have this bearish engulfing candle, and typically when we form bearish engulfing candles, we do tend to see some continuations to the downside by a few points. Does have to be like a massive move to the downside. It doesn't have to be massive, but it could be like a little bit stronger. Another example is like this right here. We had this very bearish looking candlestick. We did push a little bit more before we came back down lower. And then I saw another example like back here where back in like July 2023, SPY was rallying. We got this bearish engulfing candle, pushed for like 3 days, some consolidation before we started to dip once again. So, with that happening, what you'll notice is that on the chart, we have something very similar developed right here. We have this very bearish looking candlestick right here. This could be the start of a little bit of a dip that could be coming to SPY, if anything. And there's a good chance that that's going to likely pan out, in my opinion. The daily is also showing a little bit of weakness. Now, when you look at the 4-hour time frame, you will also notice that this is kind of resembling a potential bear flag like structure. So if I kind of like zoom out like this, you guys could see we have this low right over here. We're kind of forming this flag, and then we could continue lower. And we have a lot of gaps to fill. So there is a risk of it dipping a little bit lower, in my personal opinion. So I think that the market is actually going to dip a little bit, but we need confirmation. I want to see it basically lose some key supports, the hourly 200 EMA and also the 4-hour 50 EMA. And that's going to give us a lot of confirmation that that move is likely going to come. So what I think is going to play out is this. I'm now going to pull up the chart like from this end and kind of pull out a nice Fibonacci retracement chart from right about here where this low was. And what you'll find is that, we haven't even touched, we came very, very close to our points 236 retracement. We kind of bounced very close to that, but we haven't really made our full move down. So I personally think that what's going to happen to SPY is there's going to be a little move to the downside coming. I think that it also depends on how we move relative to where our peak happened to be. So if we were to, for instance, and hypothetically, if we were to actually try to push a little higher, it's possible that SPY tries to make a move where it's, tries to attempts to get to the high Up here, it's possible, a little bit less likely, and then we could be making our way back down lower, going into next week down here to about this 520 to 523 area. I'd be looking at like 521. That's where we have this previous resistance right here. So we have a gap fill at 523. We might even go all the way down to the 521s before we try to get a big bounce. And I think that, this could just be a trap where, we kind of dip a little bit to 521 and then we get a big bounce and just go back up to new all-time highs. That's always a possibility, right? Because there's a lot of fake outs in the market, just like how we got this like big drop, we kind of rebounded a bit. So the market's full of fake outs, right? It doesn't have to be like that. So I think there's going to be a big bounce back to 530 plus once we hit like 521 to 523. So that's what I think is the most likely possibility. But in order for this to play out, we need to watch for confirmation. If we continue to push, we end up breaking this high up here, or if we just like from bearish divergence, regardless of what happens, if we do break this high, then we could go a little higher first before we make the move back down. So then there could be one more little push before we end up dipping back down to actually, enter those Fibonacci retracement areas and also that gap fill at 523. So we'll have to watch and see what the move is. I personally think that this one right here is going to play out. Whoops, give me 1 second. This right here is what's going to play out. This trend line right here kind of shows it, where we kind of pump a little bit more, we retest this resistance, or we come a little bit short of it, and then we get this rejection. I think there's going to be a little pullback coming. They might try to use this data as an excuse. Maybe it's when Kashkari gives his speech. Kashkari is known for being a big hawk. He's going to be speaking on Tuesday. If it's not him, maybe it's data later on for the week. Maybe it's because of the GDP numbers. Maybe it's because of PCE. PCE shouldn't be the main reason, though, because the last CPI report was actually decent. So I'm not counting on that, but it might be one of these catalysts coming out for the next few days. Now, one thing worth noting about the way the market moves is that the market does not solely make moves just based off data. And you have to remember that. Yes, data could affect the markets, but that's not the sole reason. A lot of the time, it's just these big players moving liquidity around, trapping retail, playing games, doing traps, and the list goes on. And they move money around and they used the reasons behind it as data. So they use data as a time to enter in, to sell off, really, really hard, and to do all sorts of things. It's all just form a part of their manipulation. So for instance, right, on Thursday, the PMI report came out. They used that as an excuse to dump the market super hard. This was just them moving liquidity around. Okay, then Friday comes, we get the Michigan data. They use that as an excuse to pump the market back up. It's all part of their games to trap retail and to squeeze shorts on Friday. See how it works? They're just playing their games. So I wouldn't be surprised if they do something like this. We get another zigzag market, we pump a little bit or we come short, and we get one more little pullback. I find that to be the most likely possibility. If we fail to break this 50 EMA, that's going to be the confirmation of it. So watch this 50 EMA as our support on the 4-hour time frame. If we lose that, then yes, I do think we're going to be coming back down to 521 to 523. And then don't turn into a mega bear if we were to hit that, support over there. Because remember, this is previous support becoming, or previous resistance becoming support. They might just buy us right back up in that area. I would say 521 to 523, that zone. That's what I'm going to be watching for on SPY. Now, if that were to be the case, this might be kind of correlated with the QQQ doing something very similar, because we had a very, very similar looking structure on the daily time frame on the triple Q. Now, the QQQ held up our 20 EMA quite nicely, so it's still holding support. We're not officially super bearish. We're not getting a rug pull just yet. But if you look at the Fibonacci retracement chart, our 50 EMA aligns with our 450 area. So there is a chance we might actually see us dip all the way there, maybe a little bit lower towards like 448. There's a gap to fill at 446. So I wonder if we're going to go all the way down there. It is possible. Somewhere between 446 and 450 is where the QQQ will bottom. But it depends. Will we continue to see a bearish structure with this playing out? It's possible. If we lose our 20 EMA or close below it, then we could be looking for a move all the way down here towards the gap fill between 446 and 450, somewhere there, before we see another big push right back up in the month of June. That's what I think is the most likely possibility based off what we're seeing over here. We could even see the 20 EMA or 200 EMA slowly curl upwards, and we just slowly, we see these kind of combine. Maybe not like that quickly, but it may take some time, like a week, for the move to play out. But this big gap over here to fill at 446 is something worth noting. That's where we have an imbalance as well in the 4-hour time frame. That's going to be an area that's going to kind of draw the QQQ down a little bit. So if we fail to break this high right here, then there's a very good chance that this is going to play out. So I'll be watching that very, very carefully just to be safe. So watch and see, do we break this high or not? If we break the high, could remain a little bullish for some time before we get the move down, but I'm not really counting on that. I favor that we're going to either push a little bit higher and then make our move down, but then we're going to get bought back up again, as this is going to form another like trap. So what does this mean for Tesla? Is Tesla about to collapse? The answer is not necessarily. I do not think that Tesla is going to collapse as a result of all of this. I think that Tesla is going to hold up very well relative to the markets because it's just building strength right now. Now, one thing worth noting about the way Tesla's been moving is if we pull this out right here, you'll find that we're still holding the support very, very nicely. We actually bounced very close to where our zero point 0.5 retracement happens to be, and we're kind of shuffling the 0.382 retracement area. So I think Tesla will remain range bound for some time. We could pop and drop. I'm going to be looking for a test of 180 to 182, then a move back down into the 170s. Some sideways consolidation price action might be a little bit boring next week, but then ultimately, do not forget that historically, Tesla is green 78% of the time in June. That's the strongest month of the year for Tesla by far historically. So there's a very good chance that even if Tesla does see a little dip, or we just continue to consolidate in this range with the dip coming, Tesla will do something like this where it comes down once again back up to possibly like 172, comes back up, consolidates, and then once we get to June, we get this rally back into the 200s just like that before anything else. But I still think Tesla could make a move like this, looking at this structure, looking at these gaps to fill and this inverse head and shoulders. So I see a move like this coming, maybe a little dip before the move ends up being made, but it's still holding up very, very well. Now, Tesla could even go all the way down to 168 and still be bullish. So even if we do get a little dip down with the markets to 168 on Tesla, we could still get a very, very big bounce in the month of June. And I still favor that. Looking at these technicals, looking at this bullish accumulation structure, that to me looks very, very probable. Additionally, I just wanted to call out that if you were to take, another Fibonacci retracement chart from up here, from this high, and we actually make our way back down lower, this pump to about 202 would be where our 0.5 retracement happens to be. And we're kind of shuffling right over here around these key fib levels as well. So could we get a push back up to the 0.618 retracement area? It is possible to go up to about 220 in the month of June. That would be actually a very, very key technical move. So I'd be eyeing that a little bit later on. So that's the reason why I had like this 220 area kind of like mapped out. So I think basically, in a nutshell, the market might get a little pullback. And part of why I say that is also because of the VIX. Now, the VIX doesn't guarantee anything. It's not officially breaking out or anything, but historically, just when you look at the data, let me pull up the weekly on the VIX. I think that's going to be a little bit more useful. So I know this is kind of messy, but you guys could kind of see this. The VIX is at the lowest level we've seen in all of 2024. So like right here, this is 2024. It's the lowest we've seen in 2024, 2023, 2022, 2021. And also, we're actually down to 2019 levels on the VIX, which is pretty crazy. And notice when I zoom in right here, that doesn't mean that the VIX has to just squeeze like crazy and the market has to crash. It does not mean that. But look at this. Since since 2019, the VIX, when it hit this 11 to 12 area, it does love to bounce here. Within 3 weeks, it loves to bounce. Within 2 to 3 weeks. Between 11 and 12, it loves to bounce. That's what it's done historically for the past 5+ years, right? There were periods where it went lower, but this was all the way back in 2018. That is very, very far back. And since then, we've never seen the VIX really hold levels this low for too long. So what I think is going to happen is I think the VIX may get a temporary bounce. It doesn't have to, this doesn't mean the VIX is going to break out, okay? It might just be a temporary move to the upside, 1 week of green for the VIX. It is due for that. And it might be just retesting like 14 to 15. So a little increase in implied volatility. And this is going to be correlated with the market. And it's going to be because of the market potentially pulling back a bit. That's the most likely possibility. I think that SPY may test 521 to 523. And as a result of that, that may lead to some downwards pressure for Tesla stock. A little bit of downwards pressure temporarily. Let's bring back the 4-hour time frame. Just temporarily, Tesla may pull back a little bit, could retest 172, maybe even 168, but I still think Tesla will hold up in this range, continue to consolidate in this big range that we have right here before a big rally in the month of June, which is what Tesla loves to do historically, back into the 200s. So once again, I think that the move to the downside is just setting up for another squeeze. The overall market could still bounce very, very nicely in June. I'm just saying that we might get a temporary pullback starting as soon as the next trading week. All right. So that being said, hopefully this TA was useful. Hopefully this brought some insights for you guys. And I just want to say I really appreciate every single one of you. Have a great weekend, guys. I'll see you guys tomorrow, and peace out.